Good evening. Good evening. What's up, everybody? What's up? Shout out to y'all. Shout out to y'all. What's up, everybody? Today is Sunday, March 23rd, 2025. We're going to do it's a new week in the market. So we're beginning a new week, and it's pretty much the last week of March. So we're going to do a end of the month analysis, and we're beginning a new week. What's up, everybody? What's up, Shy Swag? What's up, Daryl? What's up, Ryan? What's up, Lenny? Appreciate y'all joining on this Sunday evening. How's everybody doing? Time to get ready back in that mode. Hopefully everybody had a good weekend so far. So it's already time to get back into that mode and that stay locked in and seek opportunities in the market or at your place of employment. So whatever you're doing out there, make sure y'all lock in this week. Stay focused. What's up, Tino? What's up, Lenny? Charts and Hoop. Okay. Yeah, back to the weekly grind. So, the grind don't stop, especially if y'all live in the United States of America. There is no days off, to be honest. And if you're taking a day off, somebody's out grinding, somebody's out hustling you, trying to get to their next level. So, again, I don't be having time. I used to have time for all kind of stuff like sports and all that. I don't have time for that no more. You know why? Because I get tired of watching multi-million-dollar athletes, play for 3 or 4 years, retire, and then they live out the rest of their days. They live pretty much comfortable, even though some of them blow their money. But hey, man, I get tired of watching these, especially in the NBA players. Y'all know the NBA players, they be trying to load manage. They don't be wanting to play no more. I don't even want to go pay to see them play because it ain't like how it was back in the day. Especially like when Kobe Bryant was living, Michael Jordan. Y'all know the game was a little bit tougher. So these new athletes, man, they soft. They real soft. So I'm not willing to pay my money to go see them play. You say you have 3 kids. Definitely no time. What's up, Nikolai? What's up? If y'all just joining, make sure y'all hit that like button, subscribe if you're brand new to the channel. So let me go ahead and get a roll call. Y'all shout out where you're from, city, state, country, region. Whatever y'all want to shout out, go ahead and shout that out. Let me get a quick roll call. Let me go ahead and get a roll call. Y'all shout it out. Shout out where y'all from. Okay, we got Chicago in the building. Shout out to Chirac. Shout out to LA, California in the building. Shout out to the West Coast, the entire West Coast. Shout out to Chicago. I got a lot of people from Chicago in my live stream, so shout out to Chicago. I've been there twice. Shout out to East Coast Canada. Shout out to Canada. It ain't no beef between us, so ignore what Trump and Trudeau or whoever y'all prime minister is. Ignore all that. Ain't no beef. If y'all over here, we family. So shout out to Canada. Shout out to Chicago. Appreciate y'all joining. So if y'all just joining, we got a whole bunch of Chicago people in here. The whole Chi-Town is in the building. So shout out to Chicago. What's the temperature like in Chicago? Is it starting to warm up a little bit? What's the average temperature in Chicago? I know where I'm from. I'm down south, so we're getting 80-degree days already. You know what I'm saying? So it's starting to heat up where I'm from. Shout out to Canada. You said it's raining and cold. Yeah, we I think we're expected to get some rain, but it's definitely going to average around the 70s and the 80s. So it's already spring, full blown spring in the south. Oh man, 46? That's crazy. I think the high got up to around 75, 76 where I'm at. But I'm going to pray for y'all, man. Hopefully y'all get some good weather coming soon. Hopefully y'all get some good weather coming soon. I definitely appreciate everybody joining. We're going to get into it. We got some things to cover. We're going to cover the news first. I think some things that I find interesting, something to make the live stream a little bit entertaining, some conversation starters. So we're going to get into some news, and then we're going to roll over to the charts, where that's where y'all come to watch me. If you're just new, if you're new, or if you haven't heard, the Patreon is available. You can come over to my Patreon if you choose to sign up. You can come to the membership options, and I pretty much only got one tier right now for now. So you can come over here, sign up. I got the beginner tier or the community member. So go check it out if you haven't if you choose so. I mean, other than that, let's go ahead and check out let's come over to the news. Let's go check out some news. So the first thing I want to cover in the news so far, let's talk about the U.S. economy and some inflation. You know, are y'all still being impacted? I hear eggs are like $20 in some places, or it's getting extreme with eggs. So, or just things, period. I know where I'm from. I'm near like a farmer's market where we got local local people that pretty much have their own chickens, and I'm getting like, I could get a dozen of eggs for like $6 to $8. So for some people, they not able to get that. So these grocery stores, they're definitely marking it up on y'all. That's because those grocery stores are paying mortgages. They're paying rent. So of course they passing it on to the customer. So again, if you can, wherever you're living at, if y'all can find some local sources, y'all should start doing that when it comes to food. But let's go ahead and get into what the economy is doing. How's the people feeling? What's the overall sentiment in the economy? So let's talk about it.
Well, let's pick out some cans.
No salt.
Chris Richey and Carmen Carey are retirees struggling with the rising cost of groceries.
And the price of food has really gone high,
The eggs.
But you won't find any prices here. The Manna Food Center Market in Silver Spring, Maryland, gives away everything on the shelves for free. Its director says the charity serves about 5,000 families a month.
We expect to see increasing demand. And right now we're tight as it is.
Inflation and unemployment have both risen since Donald Trump took office, despite his campaign promises of economic prosperity. Richey says he voted for Trump. He doesn't like the higher prices, but thinks they're temporary.
You want America to get stronger,
And this is the price that you think you have to pay for that?
Yeah.
Others are more.
Anybody in my live stream retired? Are you retired age, or you coming up on retirement? And if so, there's a lot of people that's retired, that are struggling to buy food and everyday goods. So let me know what y'all plan on doing if you're coming up on that retirement age. A lot of y'all gonna be retired because of crypto, but I'm talking about like people that are older. How's your day to day? If you're retired, let me know in the comments. What's going on?
Worried.
And it makes it hard on people, especially people on disability or food stamps.
Eggs have seen the most price volatility, not only from inflation, but from a scarcity crisis due to the avian flu. Eggs in American grocery stores are averaging close to $5 a dozen, and they're spiking to almost $20 a dozen, which is a record high. And according to the U.S. Department of Agriculture, their prices are expected to go up another 40% by year's end. Then there's Trump's on-again, off-again tariffs against China, Mexico, Canada, and come April, possibly the rest of the world.
On the tariffs we have right now, you're talking anywhere from $500 to $1,000 per person in increased prices over the next year. The reality, though, is that we just don't know how long these tariffs will be in place.
All of that amounts to a lot of uncertainty. Experts say the U.S. economy is still relatively strong, but no one knows how long that will last. Heidi Jo Castro, Al Jazeera, Silver Spring, Maryland.
Man, we got so much land in the world, so much free resources, but we playing this crazy ass game, so ain't no excuse for like people having to starve. So I got sympathy for people who are starving. So because I've seen a documentary on how much food we have thrown away, and it's ridiculous, especially in the United States. But that's that. Let's go ahead and check out this next video. let's see. This is more dealing with the economy, and let's see what Trump and his plan with the tariffs. Let's look into what the tariffs are pretty much how they are impacting the U.S. economy. So let's check this out. 1 second.
The big money is coming in on April 2nd, from April 2nd.
The next round of President Trump's tariffs will be reciprocal tariffs, which economists say threaten far more countries than his other trade policies.
Whatever they tariff us, other countries, we will tariff them. That's reciprocal, back and forth.
But economists overwhelmingly agree that the move will hurt U.S. consumers with rising prices. Tariffs in general raise the price of everyday goods because companies pass the higher importing cost onto consumers. But reciprocal tariffs will amplify this effect because the policy will raise tariffs across so many more industries.
Tariffs tend to reduce entry by foreign companies. They don't find they're not going to have enough of a market to make it worth the investment to enter that market.
This would reduce the variety and reliability of products available to American consumers. But Trump sees reciprocal tariffs as a way to even the playing field.
Countless other nations charge us tremendously higher tariffs than we charge them. It's very unfair. We have been ripped off for decades by nearly every country on earth, and we will not let that happen any longer.
The idea of fairness never involved a comparison of tariff line by tariff line, because there were just so many more issues on the table in thinking about what is a fair deal.
The U.S. is one of 166 members in the World Trade Organization, and under WTO rules,
you have to offer all the members of the club your best rate, except you're willing to cut these special deals with friends. There is a presumption built into the World Trade Organization that lower rates overall are a good thing, not only for the world economy, but for individual countries.
Trump blames the imbalance in tariff rates for the growing U.S. trade deficit.
China's average tariff on our products is twice what we charge them.
Some economists point to the fact that the U.S. needs to run a trade deficit because other countries want to acquire dollar-denominated assets because those assets have historically been viewed as safe assets.
Some economic experts point to the federal budget deficit as another reason the U.S. consistently has such a big trade deficit.
That is a source of the need for borrowing from abroad.
Economists say they're generally not concerned about the trade deficit because debt isn't inherently bad. It just means the U.S. is borrowing from the rest of the world. But economists do watch the level of U.S. debt overall.
There is a case to be made that we need to reduce consumption relative to our income. How do we do it? Certainly not with bilateral tariffs.
That's because higher tariffs don't just reduce imports, they reduce exports too. When imports go down because tariffs make it more expensive for American companies to buy foreign goods, there are fewer dollars in foreign markets, driving up the dollar's value. This makes American exports more expensive for trade partners, so they buy less of them. In the end, imports and exports both go down, leaving the deficit unchanged. According to economists, another reason why reciprocal tariffs won't reduce the trade deficit is because companies often shift their supply chains to other countries to avoid high tariffs.
We have reduced our trade with China, but we still need the things that we used to get from China. Companies that make footwear have turned to subcontractors in Vietnam to avoid the high tariffs that were placed under the first Trump administration. This happened for a lot of different goods, and altogether you saw the U.S. trade deficit with Vietnam growing. You will be like playing whack-a-mole. You will try to close the deficit on one country, and it will just pop up for another country.
Trade experts say that implementing reciprocal tariffs will be logistically complicated because there are thousands of items that are affected by tariffs, and the U.S. has nearly 200 trading partners. Some economists argue that reciprocity doesn't make sense as industrial policy.
Whatever they're charging, we're charging. Very simple.
What it does is it gives other countries the right to set our tariff rates. So if another country wants to protect something that we don't feel we need protection, something that we're really good at, we adopt their tariff rate because we retaliate against them if they won't lower their tariff rate.
Many countries already have lower rates than the U.S., and it's unclear whether Trump's plan involves lowering rates too. Trump has also said he wants to use reciprocal tariffs to target the European Union's value-added tax, which is similar to a sales tax.
They have a 20% VAT tax, which we're considering to be similar or the same as the tariff.
The U.S. auto industry has been getting hammered and hemorrhaging jobs for so long. It is massively unfair treatment, and the president is making clear that we are going to pursue a policy of reciprocity.
This reciprocal tariff plan is just another example of Trump's far-reaching protectionist agenda.
I think there's two possible outcomes. One is the rest of the world then says, okay, it's a free-for-all, we all going to raise our tariffs. But there's an alternative path, and it's one that is actually more likely than a lot of people might think, which is that the rest of the world says, okay, the U.S. is going its own way. We don't think that that is enhancing to our economies, and we will band together. Basically, it will isolate the United States.
People familiar with the administration's tariff discussions told the Wall Street Journal it could take 6 months or more to actually implement the reciprocal tariffs. But many economists still worry the slew of tariffs will worsen inflation and lead the U.S. into a recession.
We have times when the trade deficit falls, you may say, oh, that's good. But in fact, no, it's bad. Because what it means is that the U.S. economy is going through a very rough time.
So that's tariffs. Essentially, it's all warfare. It's just, hopefully we don't ever have a hot war. In my opinion, it's just cold warfare, and they're doing the tariff wars, and they're going tit for tat. So, hey, I'm not no expert in tariffs, but I feel like that's part of economic news. So I think it's something to cover. When it comes to me and analyzing these markets, I don't care about none of that because I know how to find opportunity right now. So, most Americans don't know that, how to get opportunity out of these markets right now. So the next piece of news I want to talk about, let's go ahead and let's see how the people, I like to come over here and see how the people react and how they're feeling, because they can tell us all these news, but let's see how the people are impacted by the tariffs and fighting inflation. So let's see what the people got to say. Boots on the ground. We got to go to the ground, go to the streets to see what the people are saying.
Are there any 80-plus-year-olds that would love to get married that have all their Social Security, retirement, Medicare all figured out that would put me in their will? Preferably with a chronic illness that's letting you stick around for the next 6 months to a year. It will be the best 6 months to a year of your life. I will definitely keep you on your toes. But yeah, I'm not above it. I'm not. I'll marry you. I know all the paperwork. Like, I know the stuff that you have to get because I saw how they did everything for my grandma. I'll get you that bed that has little buttons that'll adjust on it. I'll get you that toilet so you don't even have to leave the room. I know what nurse to get. I know who to call. I will say I do have an attitude. I do. That it is what it is. But that sometimes helps because sometimes these nurses catch an attitude and deny you things that you fucking deserve. And not on my watch, King. Not on my watch. Okay? I know the aftercare after, it's your time. I know where to take you. I know who to speak to. I know what to ask for. So, yeah, if you want to just drop me an email, or if it's easier for you, write me a letter and you can drop it off at my job. And I will for sure get it. But that's what I'm looking for.
I've had it up to here with this economy and it's getting out of control. Y'all know these things are $2 now? They're selling these chocolate bars for $2. $2! That's what I said when my coworker asked me, you guys want to buy some candy for my daughter's fundraiser? I'm like, yeah, what are we selling? He's like, chocolate bars. I'm like, oh, yeah. I gets down with the, we go way back. Go to my wallet, about to pull out some money. She's like, yeah, $2. $2? And then I wanted 2, so $4. I was shocked. This is getting out of hand.
Can you please just hear me out? No, all work management platforms are the same. They take forever to learn, and in the end,
let me know how I just spent $10 fucking on a main.
Hey, Derek, you said them candy bars been $2 for a long time. I agree with you, but people not cutting back. So the things they're not cutting back on because of everything else is going high, now they're starting to pay attention. I remember years ago, about 3 or 4 years ago, I started noticing the prices of everything going higher, getting higher and higher. And I used to tell people around me, like, man, you don't see this? You don't see this? Hey, are you paying attention? And people ignored it. I was stacking food. Like, I was buying like grains, rice, bags of rice, grains, all that stuff that you can perish for a while. And People wasn't getting it, but here we are, fast forward. And I'm talking about I started seeing it around 2019, right before the pandemic. And of course, the pandemic hit 2020, and in 2021, people still wasn't seeing it, but I was seeing it then. Inflation, the printing of the currency. I'm like, man, y'all better start saving money, telling people. You better start saving, you better start stacking up on things you need. And then here we are, 2025. People complaining about eggs, people complaining about candy bars. So here we are, you know what I'm saying? And these people still don't choose to cut back on certain things, like getting their hair done, getting nails done, just reckless spending, buying liquor, for you cigarette smokers. If you just cut out cigarettes, if you was to cut out cigarettes, do you know how much money you would save for the people that smoke cigarettes? And I'm not coming at y'all, I'm not attacking y'all. But do you know how much money you would save if you just stop smoking? Same with you drug users. If you cut back on, let's say, marijuana, if you just stop spending money on marijuana, do you know how much money you will save? So this is the type of stuff I was telling people, but let's continue this video.
Mango smoothie. There's nothing else in here. It's just mango and non-fat yogurt. How the fuck did I spend $10? How are you affording to live? Wages are not going up. Obviously, there's fat inflation right now. Like, how are people with families affording to make ends meet? Like, I'm privileged enough to not have that responsibility right now, not have to worry about that right now. And I can't imagine people out there with families that have to, like, put food on the table. Like,
so do y'all hear this young lady? She can't imagine people with families, but I'm assuming, like, Lenny, you explained your situation. Pretty much probably most of the people on my live stream have families and are beginning families or whatever. And it's harder for us. But for people like this young lady right here who doesn't have children or probably isn't married, she's feeling it and she's complaining. So a lot of people, if y'all haven't noticed, a lot of people, especially a lot of women, they're not trying to have a lot of kids these days, which it's inevitable anyway, because that's just the nature of humans. We're going to have children. So it's no running from it. And I tell a lot of people around me is like, what's going on right now isn't our fault. This shit happened generations ago. So all you can do is adapt to the times. And a lot of people choosing not to adapt. So let's continue.
Like, I can barely afford basic necessities. Yesterday, there was this girl on TikTok, and she was showing her like 450 square foot like studio apartment in New York, and she's paying almost $3,000 for it. $3,000. Like, that is so much fucking money. Like,
oh yeah, Lenny, you say you borrowed and you save money on your haircuts. Yeah, y'all, for men, especially men. I can't speak for the men that have like long hair, locks, whatever y'all have in your head, but men, you better invest in you a pair of clippers, liners, and start learning how to cut your own hair. You know what I'm saying? Like, learn how to cut your own hair. And do you know how much money? Now, I'm gonna do another reaction video today. I'm probably on another video. But the barber industry or the beauty industry, I remember when I was getting haircuts. I remember a haircut was $5. I remember a haircut it might have went up to like $20, $25. I'm not paying no more than $25 per haircut. I'm just sorry. Like, but I know a lot of y'all in some places, y'all might be paying, like, haircut is getting crazy. Like $40, $50 for a haircut, sometimes $100, $200. And don't let that barber cut some type of celebrity or entertainer's hair. They're gonna go up. Oh, also these barbers, they want to be like rappers. So they got the Instagram, the social media popping, and if they got any type of following, you better believe they're gonna go up on those prices when it comes to haircuts. So just men, invest in you some clippers. I'm sure a lot of older men have clippers, but if you have not tried at least once in your life to cut your own hair, I advise y'all to try to cut your own hair one time in your life. And then you know how much money you will save. Hey, we in them times. You don't need nobody cutting your hair. You need to learn how to cut your own hair. And you're going to mess up. Trust me, you're going to mess up. But you better believe over time, you will get better over time. It's just another skill set that you might want to obtain and have.
More than 50% of a lot of people's salaries, like the average American salary. I'm so worried, especially for
Shy Swag, you said $20 for a lineup. That's what the lineup going for nowadays? Man, that's crazy. I remember a lineup used to be like $5, a full haircut $15. So that's crazy. Now they want to charge you for the mustache and the beard and all that. And then they want to do the facial, you know, make sure your face and your skin is doing good. So this shit getting out of hand out here. But I guess barbers got to eat too.
our generation, I feel like we're never going to be able to buy a house. We're never going to be able to just like enjoy the average things that like every human being in this country should be able to enjoy and should have access to. This is my fucking dinner for today. Also, I used to have the WAG app in high school, and I would just like walk dogs for fun over the summer. I had to re-download it now because I'm like, not only am I a dental student, but I'll be your dog walker, I'll do your nails, I'll do your brow, I'll clean your house at this point. I don't care. Just let me know what you guys are doing. Like, are we riding at dawn? Are we not paying taxes? Let me know.
Bro, why? Before this goes any further, I'm not stupid. I understand economics. I understand capitalism. I understand inflation. I guess. But why? Why is inflation even a fucking thing, dude? A cow's still a cow. A chicken's still a chicken. Eggs are still eggs. A trees are still a tree that makes wood. I don't get it, bro. Nothing has changed except the value of our dollar. Like I said, I get it, it's inflation, but I don't understand. Why? What makes it go up? Who makes it go up? This is gonna go.
And right there's the problem, y'all. What makes it go up? Who makes it go up? People don't have time every day. People are caught up in their world, in their life. And that's why I play these videos, because we can learn from this. We can definitely learn from this. And the American people and people in general worldwide don't know who run the system. Who runs the system, y'all? Y'all tell me in the comments. Who's controlling the system? Who's running the show? Who's controlling inflation? Who's doing this? And it's a simple, in the age of technology and information, it's a simple, just you got to deep dive and do your research. There y'all go. Lenny, Daryl, Frozen, shout out to you. The central banks, the Bank of International Settlements, the International Monetary Fund, the central banks, the Federal Reserve, all these different these entities. Let me come over here right quick. Let me pull this up right quick. Let's go to the global rates. Show you the global rates. And we're gonna go over to the let me pull it up right quick, and then I'm gonna come back to this video. But the people, that's why I come to the streets, because the people, they don't know. They don't know what's going on. So I'm gonna come over here. I'm gonna come back to that video in a minute. But again, who's in control? Of course, at the top of the pyramid, we got the BIS, the IMF, and then we got all these central banks that the people don't have no idea what's going on. We got the American Central Bank, which is the Federal Reserve. We got the Australian Central Bank. We got the Brazilian Central Bank, the British Central Bank, the Canadian Central Bank, the Chilean Central Bank, Chinese Bank, the Danish, the Czech Central Bank, the European, Hungarian, Indian, Israeli, Japanese, Mexican, New Zealand, Norwegian, Polish, Russian, all these central banks, Saudi Arabia, South Africa, South Korea, Swedish, Swiss, they all work in collaboration. They all work in collaboration, and they're really up under the United States, because the United States dollar is the world reserve currency. It's the world reserve currency. So all these countries, all these nations' banks have to do what the United States do based on that world reserve status right now. And they all collaborate with the BIS and the IMF. So again, it's not hard to do the research. People have to take the red pill. I mean, yeah, people have to take the red pill. You have to red pill yourself. You got to come up out of that. So let's continue with this dude right here.
Way over some heads. But none of this started till like 1970. And not a lot of people know what happened in 1970. I think that was the year anyway. But nothing has changed except the value of our dollar. And I don't get it, bro. It don't even make sense. It's astonishing.
I'm actually like not in the mood for anything right now. Everything is just too expensive. I went in for an oil change this morning. He told me to come see something real quick. I should have turned away. I go in, my car got its legs in the air. Why is she up there like that? They send me to work in an Uber. How much you think that cost?
Can you tell which one of these ads is AI?
I am so sick of this economy and inflation and baby boomers. And I know that there's like a million people on TikTok every day complaining about inflation in the economy, but I don't know how I'm going to do this anymore. First it started with my mom couldn't watch our kids while we worked anymore, which is totally understandable. You know, I can pay a babysitter, we'll cut costs, we'll budget it, we'll make it work. And then we lost Medicaid because it was only being extended for us because of COVID, and all the COVID like government benefits stopped. Okay, that's fine. We'll budget for health insurance, we'll cut more expenses, we'll sacrifice, we'll work more hours, we'll do whatever. And then student loans, we weren't planning on student loans being.
Man, my generation got it real bad. Like, my generation got it real bad. It's always been bad, but my generation and below my generation, they got it real bad. And it's not how it was a couple decades ago. I'm going to say that. Things were always hard, but hey, man, we got to deal with this inflation like a mother, you know what I'm saying? Like, so it's crazy. So
forgiven. So we were already trying to figure out how to make it work to pay when payments started up again. But both my husband and I have student loans, and I cannot believe our student loans have gone up, even though we've always made the payments on them because the interest is just so high. And so we were trying to figure out how we're going to do that, and we really didn't know. And then the final blow of it all is our property taxes were raised, which we were expecting because they evaluate home values the same time every 2 years, but most of the time it's only like increased by like a couple of $100s a year. This time increased by a couple $100s a month. And on top of that, when that happens, your homeowner's insurance goes up because it covers the value of your home. People, they're saying my home is worth $500,000, which is bullshit because I can't list it for $500,000. A real estate agent straight up told me that. So we contested it with our state, with our county, and they basically said, fuck off. This is what we've decided. We reject your appraisal. So I went from $1,600 a month in a mortgage to almost $2,000 for the homeowner's insurance and everything. And I got to pay back 2 student loans. I got to pay babysitters every time I go to work. I have no idea how to keep.
what does society tell y'all? Go to school, get a job, get an education, take out them student loans, and then they walk you right into a setup, into adulthood. So it's real messed up out here, man. And hey, that's why I come to the streets and I want to see what the people got to say, because people struggling. But I'm gonna move on from this. I will cover more at a later time. So today, how many of y'all have ever traded futures trading? How many of y'all ever got into futures trading? Have you ever delved into futures trading? Come over here to the CME. If y'all just joining, make sure y'all hit that like button, subscribe if you're brand new. Ryan, you said you never did. Okay, we're going to cover it. Lenny, I know I mainly cover crypto, but I'm a futures trader. Move accordingly. You said you never did. Okay, we're going to cover that today. So since most of everybody has not ever traded futures, I want to take people from, in my community, in my space, especially for the people that want to learn how to trade. Okay, let me ask this. How many of y'all have ever traded meme coins? Anybody traded meme coins? So majority of everybody that's commenting never traded futures. But how many of y'all have ever traded meme coins? So, okay, Seth, you traded, move accordingly. You've traded meme coins. Anybody else? What's up, Ed Guzman? So this is why I understand. And I'm a young person myself. I'm a young person, but maybe I had mentorship and I had guidance when it comes to trading. A lot of y'all would take risk on meme coins, but never thought of, or even when I look in the algorithm on YouTube, futures trading isn't widely talked about. I don't know why. and it's a part of the traditional markets. But in my opinion, if y'all change y'all perspective about meme coins, and I'm sure a lot of y'all are in meme coins right now, if y'all just change y'all perspective and come over to the traditional financial market and go to the futures markets, the opportunities are way better in futures trading than it is in trading meme coins and crypto. And because cryptocurrency is about to be regulated, and they're starting to release futures products for cryptocurrency, it's going to be regulated into the traditional financial system. So we're going to start seeing Bitcoin futures. Matter of fact, they already got Bitcoin futures. They got Ethereum futures. And then before you know it, we're going to have XRP futures, XLM futures, Solana futures. All these different crypto futures products are going to be in a regulated environment. And it's a better market. I'm going to tell y'all that. It's a better market with better opportunities. So for the people that like to take a little bit of money and go trade in the futures markets, take a little bit of money and, for the people that like to take a little bit of money and go trade in the crypto market, the meme space, take a little bit of money and come to the traditional markets and the futures markets. So let's do a little history right quick. Let me show y'all right quick. Let's come over here. I'm going to introduce for y'all who had never traded futures. It's no different. It's just financial institutions. They offer different products like ETFs. How many of y'all invest in ETFs? How many of y'all invest in traditional stocks? 401, just traditional products that brokers have to offer. Well, futures trading is for more savvy investors, people that are more savvy, meaning they have more technical skill. That's what I teach on my channel. If you watch my channel, I have more technical skill. So if you can learn this skill set of learning how to read the markets, read the charts, do technical analysis, then you can come over here to the futures markets. I don't recommend that to nobody who doesn't know nothing at all about trading. But if you know how to read price action and read charts, the better market is in the future space. So let me come over here and bring this video up. Let me introduce some of these futures products or history of futures. So on this video right here, it says Futures Market Explained. And let's get into it. I'm going to highlight this for y'all.
A $3 box of corn cereal stays at roughly the same price day to day and week to week. But corn prices can change daily, sometimes by a few cents, sometimes by a lot more. Why does the cost of processed foods generally stay quite stable, even though the crops that go into them have prices that fluctuate? It's partly thanks to the futures market. The futures market allows the people who sell and buy large quantities of corn to insulate you, the consumer, from those changes without going out of business themselves. Let's meet our corn producer, this farmer. Of course, she's always looking to sell her corn at a high price. And on the other side, our corn user, this cereal company, is always looking to buy corn at a low price. Now, the farmer has a little bit of a problem because her whole crop gets harvested at once. Lots and lots of farmers will be harvesting at the same time, and the huge supply can send the price falling. And even though that price might be appealing to the company that makes cereal from corn, it doesn't want to purchase all of its corn at once because, among other reasons, it would have to pay to store it. But it's fortunate that corn can be stored because that means it can be sold and bought throughout the year. And this is where the futures market fits in. Buyers and sellers move bushels around in the market, though actual corn rarely changes hands.
So they're pretty much talking about the corn market in the futures market, and pretty much corn is a commodity. It's used, it has utility, just like XRP and certain digital assets. Corn is a commodity. It has dozens of use cases. But for the price not to fluctuate and be extremely volatile, they introduced the futures trading market. and people aren't actually trading physical corn. Speculators are able to go in there and trade derivatives, which is the paper market. So this is why I'm trying to show y'all that y'all might want to come over to the futures markets and trade these paper contracts, similar to options trading or whatever. How many of y'all have ever traded options? Well, this is just the futures market. So let me continue the video.
Instead of buying and selling corn, the farmer and cereal maker buy and sell contracts. Now we're getting closer to peace of mind for both sides because a futures contract provides a hedge against a change in the price. This way, neither side is stuck with only whatever the market price is when they want to buy or sell. These contracts can be made at any time, even before the farmer plants the corn. She'll use the futures market to sell some of her anticipated crop on a certain date in the future. Of course, she's not going to sell all of her corn on that contract. Just enough corn to reassure her that a low price at harvest won't ruin her business. The contract provides that security. The cereal company uses the same market to buy bushels. Their contract protects against a high price later. Contracts will gain or lose money in the futures market. If the price goes high, the farmer loses money on that futures contract because she's stuck with it. But that's okay, because now she can sell the rest of her corn, what wasn't in that contract, at the higher price. That offsets her loss in the futures market. If, at harvest time, the price of corn is low, well, that's exactly why she entered the futures market. The low price means her contract makes money, so that profit shields her from the sting of the low price she'll get for the bushels she sells now. The corn cereal company doesn't like those higher prices, and that's why they have a futures contract. They make money on it and can use that profit to cover the higher price of the corn they now need to buy. The futures market serves as a risk management tool. It doesn't maximize profit. Instead, it focuses on balance. And in this way, it keeps your cereal from breaking your weekly shopping budget.
So essentially, the futures market is a hedge. So a lot of entities, a lot of corporations, especially central banks, they're in control of all this. So don't get that confused. But like a lot of corporations, a lot of medium to large enterprises, they might have a down year. Let's say, you might have a steel company or you might have a gold mine. Let's say, for example, a gold mine. They're not doing so good in that particular year mining gold, but instead of being down in profits that particular year, they can hedge the futures market and go trade gold, which they can earn more revenue to catch up those profits that they lost in the actual mining company. They can go make up for that in the futures markets and hedge against the physical mining of gold. And then they can generate those profits back, or the profits that they expected to make. They can go get those profits in the futures markets. So it's a hedge. It's a game at the end of the day. It's nothing. This is more just the basic information of how the futures markets became, but it gets more advanced because in the beginning it was like traditional paper contracts. But in 2025, everything is electronic. Everything is at the speed of light. So that's what I'm trying to get at. Let me play one more video. And this video comes from the CME explaining the futures markets. And it pretty much talks about how, today, in today's time, the futures markets are more sophisticated because of electronic trading. And then now we're entering the age of digital trading and everything becoming, digitized. So let's play this video right here.
Today's futures markets are technologically sophisticated global marketplaces trading at high speeds on electronic platforms around the globe nearly 24 hours a day. But did you know that the roots of futures trading trace back to Greek and Phoenician merchants who carried their goods for sale around the known world, opening deep and lasting global interconnections based on trade? Global commerce now does its price discovery in our modern futures markets, which first developed in the United States in the early 1800s. The first futures and forwards exchanges grew out of the needs of the agriculture industry, where seasonality and supply and demand fluctuations could lead to repeated gluts and shortages of products, and in turn lead to chaotic fluctuations in price. Early hubs of agricultural commerce grew in Buffalo, New York, as well as other cities located around navigable U.S. waterways, which enabled delivery of supplies by producers. By 1848, the completion of a new canal and railroad infrastructure centered around Chicago linked the Great Lakes with the Mississippi River, and Chicago became a key hub for agricultural commerce. It was during this time that the Chicago Board of Trade was formed, which would eventually emerge as the preeminent grain exchange in the United States. The emergence of a central grain exchange allowed farmers and grain producers to sell their crops at set prices throughout the months between harvest, and allowed consumers to purchase grains at transparent prices throughout the year. After a period of trading forward contracts, the CBOT or CBOT introduced standardized futures contracts in 1865. These centrally cleared contracts, secured with the payment of performance bond or margin payments by clearing members, introduced a level of reliability and security to buyers and sellers which stabilized the markets against the possibility of default. The Chicago Produce Exchange was established in 1874 as a dedicated exchange for the cash trade of butter and eggs, which established grades and rules of trading. In 1898, members of the Chicago Produce Exchange formed the Chicago Butter and Egg Board. Following World War I in 1919, the Chicago Butter and Egg Board became the Chicago Mercantile Exchange. Throughout the 20th century, additional innovative futures contracts were introduced by the Chicago exchanges. In 1992, futures contracts began trading electronically on the CME Globex platform. Today, tens of millions of contracts are traded daily across all asset classes on CME Globex with millisecond timestamp precision. However, the fundamental benefits resulting from the growth and innovation of the original Midwest grain futures markets remain: risk management, transparency, price discovery, liquidity, and security, and are essential to the role of futures markets in the global economy today.
So there y'all have it. Futures trading been around since the 1800s, really before that. Like they said, it went back during Greek times and Phoenician times or whatever. Futures trading is nothing new, but it's not widely promoted. I don't know why. And imagine how many countries or corporations right now are hedging against inflation by trading the futures markets. It's the futures market to me is the derivatives market. It's quadrillions of dollars flowing through these futures. So, and they also just mentioned how contracts, tens of millions of contracts are trading every day in milliseconds. And that's what, if you watched the live stream a few days ago, that's pretty much what I was covering. And I'm gonna get into the S&P and the Nasdaq as we go through the chart. So let's go ahead and come over to the charts. Let's come to the markets. Let's look at the economic calendar. We are in the last week of March. March will extend into next week. And it will end next Monday, but I don't include that as a week in March. So April will start on a Tuesday. So April 1st will be on a Tuesday next week. So next Tuesday, not the Tuesday coming up, next Tuesday, it will be April 1st. So this is the economic calendar going into the week. We have PMI data, high impact news early on Monday, 8:45 a.m. What's up, Jay Manson? Appreciate everybody joining. If y'all just joining, I got 33 people in the building, 23 likes. Go ahead and hit that like button. Subscribe if you're brand new. If you want to learn technical analysis, hit the description in below for the Patreon. But this is the economic calendar coming up for the week. I'm not anticipating much going on. We're waiting for that quarterly close on that 3-month time frame. We're waiting for that candle to close. So that's what I'm expecting. And then let's go ahead and look into next week. So this is next week. So next week, March ends on a Monday. So March ends next Monday, 8:45. We got PMI data. So Tuesday starts April 1st. That will be the beginning of the second quarter. So next Tuesday begins the second quarter of 2025. Second quarter of 2025. And then we have a lot of high impact news going on the next week. So whenever you see non-farm payroll, just know that stands for not for professionals. Non-farm, not for professionals, because us traders, we don't trade on days of non-farm payroll. And then for reference, that Thursday, Friday, we don't like to trade those days because it's going to be very volatile, very high resistance days. And if you don't know what you're doing, you can get really hurt if you're trying to trade these markets. If you're an investor, you have nothing to worry about. But again, next week I'm extending out. Next week starts April. I'm going to go ahead and already tell y'all nothing is going to happen this week but a bunch of volatility. And then let's go ahead and forecast 2 weeks from now. So the official week for April will start on, to me, in my book, starts on April 6th, which is a Sunday. That's going to be the first week right there for April. Well, 1, 2, 3. Next week we'll start the first week, but I want to see most of the price action going on from the 6th through the 12th or the 6th through the 26th. So if we just look out to April 6th, and that week we have a lot of high impact news, but we could probably see some good volatility come into the market. So let's go ahead and look at the crypto matrix. This is the assets for all you people that, love crypto and nothing else, which I love crypto too. XRP currently trading at $2.42. XLM trading at 28 cents. XDC trading at 7 cents. HBAR 18 cents. HBAR is still at a great opportunity. Bitcoin 85,000, almost 86,000. Ethereum $2,000. It's kind of back up a little bit. Algo 19 cents and Solana $132. What y'all invested in? Have y'all purchased anything recently? If so, leave it in the comments. Let me know what y'all been accumulating while the market has been down at discount. Been a lot of opportunity going on. So let's go ahead and come over to the overall macro. I'm gonna give y'all the higher time frame perspective so far. And I'm gonna go throughout the different assets. And then we're gonna focus on, let's say, futures today. So let's go out to the 3-month time frame. This is XRP. Let's go out to the 3-month time frame. We have 8 days left to close this candle. This is the quarterly candle. So this is the first quarter of 2025. We got 8 trading days left. I wish it would hurry up. I don't like to speed life. I don't like to rush through life, but I'm ready for the first quarter to be over with so I can get more information about how we start trading in Q2 2025. We did a whole lot Q1. We did a whole lot in the fourth quarter last year from October, November, December. We did a whole lot last year as far as XRP goes. So right now we're just ranging. Again, I'm still trying to see how we close. Maybe this week we get some good volatility and we move a little bit higher away from this large 3-month fair value gap in the form of a BISI. Buy side imbalance, sell side inefficiency. I'm still paying attention to that. It's still in play. So just pay attention to that. Once this candle closes right here, in 8 days, this candle will open. So next Tuesday, which will be April 1st, there's going to be a new candle. And that candle will take 3 months. That's going to be a long time. So not long time, but 3 months it can be a long time, by the season. Now let's drop down to the monthly. So as we drop down to the monthly, we're currently in March. We have 8 days left to complete March. And then again, we will start April. That would be Q2. What have we done so far? We're just ranging sideways. They're holding the market inside of a consolidation. They're just holding the market inside of a consolidation. We traded down a discount. How many of y'all took advantage this month and last month to accumulate XRP? Let me bring up the monthly fair value gaps. Boom. You see the fair value gaps? There are inefficiencies in the market. So once we close this candle, this large monthly fair value gap, well, that 3-month fair value gap will blend with it. So watch this. Let me go back out to the 3-month. Go out to the 3-month time frame. If we close today, this large BISI right here, this large buy side imbalance, sell side inefficiency will form in the market on a 3-month time frame. See that? And that monthly fair value gap will be inside of this 3-month this 3-month fair value gap. So let me go down to the monthly again, and that's what it would look like. So that gap will essentially be way larger than this monthly fair value gap. So I'm gonna go ahead and remove it until we get that monthly close. And again, on lower time frames, we're just trading sideways. We didn't go up and take out last month's high. That's where pending orders are. The market always seeks liquidity. Nor did we come down and take out last month's low. Pending orders, liquidity. So we're just ranging. So from the monthly, we got 8 days left. Let's go down to the weekly. Weekly time frame. What market profile are we currently in? Y'all let me know. Last week, I asked y'all, what side of the market do y'all see price action going to? It is currently 8:17 p.m. Eastern Standard Time. We have started the new week of trading right here. If you look, this is a weekly time frame. If you come over to the right, it says 7 trading days left. So we got 7 trading days left to complete this candle. Y'all are correct. We're in the consolidation, sideways consolidation. As you can see, these trend lines, there's liquidity building above and below the market. Liquidity building above and below the market. So I'm going to go ahead and ask y'all this week. Let's go ahead and ask y'all. This is the current candle. We just opened up the new week of trading. It is currently Asia session. So it's 8:18 New York Eastern Standard Time. It's already daytime in Asia. What side of the market do y'all see price action going to? Are we going to reach for last week's high? Or come back down and reach for last week's low? What y'all see? Let me know. I'm going to go ahead and remove the monthly fair value gap. I'm going to hide that right quick, but just know it's still there. I'm not ignoring it. It's still in play. Now I want to throw up those weekly fair value gaps. Boom, just like that. So these are weekly BISIs and inversion gaps. So Daryl, you see us coming up to take out last week's high? Ryan, you see us coming up and taking out last week's high? Okay. And listen, that's called bias. So every week you want to start with a bias. And all bias is asking, what direction do y'all see price going for? ZZ, you said it's hard to see seeing it go back down to the big fair value gap before going to new all-time high. And what do you base that off of, ZZ? What do you base that off of? Because check it out. What are these trend lines below the market? Y'all tell me in the comments. What are these trend lines below the market? What are these trend lines? Y'all tell me in the comments. And we've seen it before because check this out. I'm going to highlight it in a minute. Daryl, you said liquidity. Most of y'all said last week's high. Lenny, you always say inside the range. You just see us trading inside the range. But what do I always teach you, Lenny? The market is always going to do what first? Even though we can have an inside range week or a day, you always want to be on the side of chasing what? Liquidity. You want to seek the liquidity in the market. There you go. So we always want to seek liquidity, regardless if it decides the range inside the range. If the market decides to stay in a range, then it just decides that. But you always want to be on the side of liquidity, seeking liquidity. You want to be a liquidity provider. You want to do what the institutions are doing. You want to think like an institution. The institution, smart money, the algorithm is always seeking liquidity, either above or below the market. So always be looking to aim for some type of liquidity. And if the market doesn't go to the liquidity, then hey, you just didn't get it right that week, and that's okay. You say you think they will hold the market this week? Okay, I hear you. But again, even as I drop down the lower time frames, they're still seeking liquidity. So just keep that in mind. Just for example, I think ZZ, you said you don't see us coming back down, but check it out. I remember, who remembers, and I've been live streaming this long. This was back in November, December timeframe. A lot of y'all probably wasn't here yet, but we retraced down into this BISI right here. Y'all see that? The highlighted gray area, that's a fair value gap. We traded down to that level and we went higher and broke the all-time high. Let's just review. This is what we call back testing. Let me go out to the monthly time frame. I'm going to draw a trend line at the old all-time high right there. Boom, right there. That's the previous old all-time high. right there. That was where the liquidity was. And then we retraced lower back down to fair value. So let me go back down to the weekly. So after taking out this all-time high right here, this old all-time high, they offloaded the long positions. And then what did the market do? This was those weeks back in early January, the entire January, where people thought the market was crashing and simply they was getting traders up out the market. But when we traded back down, we traded to sell side liquidity. We took out all this liquidity below the market. Dropped down, took out all that sell side liquidity. That's where the pending orders are in the market. Look at all these old lows. If you think it's random, hey, I don't know what to tell you. If you don't think it's real, I don't know what to tell you. It's something you have to see it for yourself. Look at all these old lows. So when you say right now you don't see the market coming back down, well, I'm here to tell you, we have seen it before recently, back in January, where the market came back down to discount. It traded all the way back down to $1.78 and took out old lows where the pending orders are in the market, dropping it back down to fair value inside of this discount. And now we're starting to move higher and we're just simply ranging. That's why I'm saying in the consolidation market profile, the market can always come back down and take out liquidity, because all it's doing when it's ranging sideways is building liquidity above and below the market. So again, we just waiting. We're just waiting. If y'all just joining, make sure y'all hit that like button, subscribe to the channel. I appreciate it. Oh, okay. So who remembers this? What is this right here? What is this that I'm highlighting? Let me zoom in a little bit. What is this that I'm highlighting? What is this? Now, I'm gonna show y'all how we have been trading around it. There you go, Lenny. It's a ghost pool. Shout out Daryl, ghost pool. So whenever you see large wicks, and you don't want to ignore the wicks, because inside of each wick, there are price levels. There are price levels. But whenever you see the large ones, never ignore them. So let me go ahead and pull up the ghost pool right there. So what you do is you take a Fibonacci. And if y'all need to know my Fibonacci settings, let's go over here. Y'all can screen capture that, screenshot it. These are my Fibonacci settings. Right now, I don't have every one of them highlighted. I'm just using the ones that I have highlighted right now. So what I do is I take a Fibonacci, I drop it at the closing price of this candle right here that forms the wick. Take a Fibonacci from closing price down to the low of the wick. Inside of this wick are hidden price levels. And also this is a discount array. So this wick low, that's a discount array. If you see a large wick high, for example, I'm gonna use this old one right here. This was a wick high. That's a large wick high. That's a premium array. So we want to sell at premiums, buy at discount. So from this candle's closing price up to the high, look how the market, the next candles trade up inside these price levels, which makes up the ghost pools, trades up into them and then sells off. Y'all see that? And that's what I'm saying. That sell off, which sold way back down to discount. So keep that in mind. Definitely keep that in mind. But right now, let's focus on the current one. And this is the weekly time frame. Each one of these candles take a week to complete. So look how we have traded down into this ghost pool. We traded down into it for several weeks now. We opened up right here, traded down, expanded higher. And then we opened up on this candle, traded back down into it. We closed down here at discount. So this candle right here closed down inside of this discount, which is the ghost pool and the weekly BISI, weekly fair value gap. Y'all see that? And then now we're starting to come out of discount because you should have been accumulating at a discount. And now we're going to start reaching for a premium. And a lot of y'all already told me, hey, y'all want to see at minimum last week's high, reach for it, because above that high is where the liquidity is. So that's what we're aiming for. So let me go ahead and hide that ghost pool. Just keep that in mind. I'm not ignoring that price level. So let's drop down to the daily time frame. What have we been doing on the daily time frame? And again, on the daily time frame, you can see that consolidation. You can see that back and forth consolidation. We pretty much been traded sideways inside of this right here. What is this right here? Y'all tell me in the comments. What is this? This large candle. Look to the left. Look to the right. What is that right there? Y'all tell me in the comments. Shout out to you, Daryl. Your trigger finger quick, man. Your trigger finger real quick. Shout out to you, Lenny. It's a Bissy. Shout out to you, Lawrence. Bissy. It's a buy side imbalance, sell side inefficiency on the daily time frame, which is a higher time frame gap. So that's a Bissy right there. Fair value gap. So what you've been seeing in the past few days, so a lot of y'all might be like, or if you don't look at charts, if you don't look at the markets, y'all might look at your phone and you might look at your assets. And you might be like, well, damn, XRP is at 243. Are we about to go higher? Well, a lot of people don't know what's going on in the markets. So we outlined this fair value gap right here. This Bissy. During the weekend, since last Thursday, Friday, Saturday, we traded down into this Bissy. Again, I live streamed it, what that was, Saturday? I live streamed it Saturday and I showed you how we were just pretty much consolidating on this candle right here. Saturday was real ugly. I live streamed it, but it wasn't doing nothing. So we stayed in the inside range day. There you go, Lenny, right there. Where this candle right here, it didn't take out the previous day's high, the previous day's low. So whenever you see days like that, you can start anticipating the next candle to be explosive. And that's what we did so far today on Sunday. We opened up, went higher. Let me go back out to that weekly time frame. Let me go ahead and frame this up for y'all. Go back out to the weekly. And what I'm going to do is I'm going to take a trend line. And I'm going to highlight this weekly candle low right here. I'm going to highlight this low right here. That's sell side liquidity. And then I'm going to highlight this high right here, the buy side liquidity of last week right there. See, I'm framing it up. So y'all should be paying attention. If you're not paying attention, I don't know what you're doing. Because again, this is free game. And everything is exclusive to the Patreon. So I'm not going to be explaining everything too much longer. This is all in the Patreon. So y'all already told me y'all want to see the last week's high reach for. So let's go back down to the daily. Let's go down to the daily. So now we're inside of that range. That's the range right there from last week to currently the new week. If I take a ruler and I measure from last Sunday, this candle right here was last Sunday to the current Sunday. Right there. That's roughly 7 days of price action right there. That's 7 days of price action. Not much at all, right? That was the weekly candle. That was the weekly range. So that's how long it takes each and every day. You know what I'm saying? That's how long it takes. Each and every week. That was the weekly candle print. We opened, we created a low, we created a high, and then the market retraced and closed. And if you look on the weekly time frame, that's exactly what the weekly candle looks like. We open, low of the week, high of the week, retrace, close. Now we have began the new week of trading. So now let's go down to lower time frames. And I'm going to pause right here. I'm going to go down to the 1 hour right here. And remember, we're going to come back to this. I'm going to come back to this. And you can start seeing XRP moving. It is currently 8:30 p.m. Eastern Standard Time. We are in the Asia session. So I'm going to pause right here. I'm going to save my chart. And now what I'm going to do is, let's go ahead and come over here and give y'all that macro review on the other assets. So I haven't been going into detail. Again, when I'm trading, I can't be in all assets at one time. I am super focused and hyper focused on like one or two assets. In the crypto market, I'm really hyper focused on like 2 or 3 assets. Other than that, I'm not in every asset because I got to watch my trades. I got to manage my positions in these trades. So I don't want to be in too many assets at a time, especially when I'm doing deep dives like that, like I just showed y'all. So even when I'm futures trading, when I'm in the futures market, Nasdaq, S&P, that's all I trade. I look at the Dow and I look at the United States dollar. Other than that, when I'm trading one market, but I might be analyzing 2 other markets. So just keep that in mind. You don't want to be all over the place. You don't want to be spread out in all these different assets, especially if you're trying to learn this skill set, because this is work. You might not think you might not think it could be work, but it's definitely work. And that's what I'm trying to show y'all. So this is the monthly time frame for XLM. XLM is currently trading at 28 cents. Let's go out to the 3 month for XLM. How many of y'all hold XLM? I haven't, it's been real quiet. It's been real quiet around XLM lately. They haven't been making too much noise. So any updates? Do y'all have any updates for the chat? If you do, just let it be known in the comments. But XLM, stellar. We got 8 trading days. So if you know the pattern, the rhyming pattern, all these markets are running on the same script at the same time. Some of the scripts are a little bit different, but again, 3-month time frame. We got 8 days left. Let's see how we close this candle right here, just like XRP. Once we close this candle, there's going to be a 3-month fair value gap that forms below the market. I got you, ZZ. I'm headed to it, so be patient for me. I'm pulling it up. Be patient. So, boom, there we go, right there. 3-month fair value gap. That's a 3-month fair value gap. And if we close this candle today, I want to see if we want to trade back down to discount. But on the monthly time frame, this is 3-month. But on the monthly time frame, we're already hanging out at discount. So right now, XLM is at a perfect opportunity to accumulate. Let's throw that Fibonacci inside of that gap. So from the high of the gap down to the low of the gap, boom, right there. If you want a deeper retracement into the gap, let's say you want to set a limit order at the high, it triggers you in. But let's say you want a deeper retracement. Look how the market goes down to these levels and hit them specifically, the 0.75 level. That was roughly around 25 cents, but XLM went a little bit lower. It went down to 22 cents. So if you was able to catch XLM at 22 cents, let me know in the comments. You're a GOAT. So that's XLM. This is a macro. I'm not doing a full analysis with XLM, but I'm just giving y'all my perspective. What's up, YC? Appreciate you joining. Make sure y'all hit that like button, subscribe if y'all brand new. Hit the link in the description for the Patreon. This is XDC. Any XDC news? Y'all been keeping up with XDC? Let me know in the comments. Remember, I can't follow all the news, especially when I'm putting in this type of work in these markets. I'm analyzing and I can't keep up with all the fundamentals because y'all also know the fundamentals are delayed. So we got 8 trading days left for XDC for the quarterly close. And again, these entire markets, the entire financial markets are waiting for the first quarter to end. So what they're doing is they're kind of pausing the market. They're pausing it, which means they're holding price in a consolidation pattern until we get that quarterly close. So I'm thinking Q2 is going to be very exciting. It could be devastating as well to some, not me, because I know the markets are algorithmic. But again, rhyming pattern, quarterly close. Let's see if we get that large fair value gap that will form. If so, let me show you some price levels that XDC could potentially go down to. So this is that 3-month fair value gap. If we close the day, I'm going to drop a Fibonacci from the high down to the low. And then I see 6 cents, 5 cents, 4 cents, 4 cents, 3 cents. So does it want to go down that low? We shall see. Let's see how we close. It's not valid yet until we close the quarterly candle. So that's the 3-month time frame. Let's go down to the monthly. And you can see the market trying to reach on the monthly time frame. We're just hanging out around this monthly fair value gap, or BISI. So definitely be paying attention to that. H bar. So here you go, ZZ. Here goes H bar. Let's go out to the 3-month time frame, which is the quarterly candle. Again, we got 8 trading days left to close this candle. H bar currently trading at 18 cents. Great opportunity. I've been highlighting it. I just might get off this live stream and go accumulate me some, because 18 cents is a perfect opportunity right now. And we're completely filling that monthly fair value gap. But let's see how we close in 8 days. I want to see how we close this candle in 8 days. And again, the rhyming pattern, you can see the same